Learn about the latest blockchain developments and explore investment opportunities in the crypto market. Welcome to the new world of crypto. Today, we'll discuss a topic that's been around for a while, but has recently taken on a whole new dimension: Bitcoin. When you think of Bitcoin, what's your first reaction? Is it digital gold, the currency that has created countless fortunes, or a speculative game rife with bubbles and risks? For years, it's been like a maverick, bad boy, lingering on the fringes of mainstream finance. However, just when we thought we had it figured out, three seemingly unrelated threads, drawn from three completely different dimensions: public opinion, national choices, and the nature of the asset, quietly converge, pointing to a surprising possibility. This once bad boy may be undergoing a profound identity transformation, a battle to redeem itself from the margins to the center. Today, we'll become detectives, peeling back the layers of mystery and interpreting the grand narrative of Bitcoin's future from these three signals. And behind this, how should we, as investors, adjust our understanding and strategies? Let's begin with the first and most shocking signal: the dramatic shift in public opinion. Recently, an organization called the Nakamoto Project released a poll of American citizens with a single question: do you think the U.S. government should convert some of its gold reserves into Bitcoin? The results? Shocking. The data showed that 4/5 of respondents, a full 80%, supported this. This isn't just a narrow consensus, it's an overwhelming trend of public opinion. Of course, as an analyst, we must first be cautiously skeptical of this data source. After all, the name Nakamoto Project doesn't sound like a neutral polling organization like Gallup or Pew. Its results are likely subject to survivorship bias, reflecting the opinions of cryptocurrency enthusiasts more than anything else. However, we shouldn't overlook two even more valuable insights from this survey. First, the choices of young people represent the future. The survey shows that the highest support for this proposal comes from those aged 26 to 30, followed by those under 26 and those aged 31 to 35. This represents a very clear generational divide. As the digital native generation begins to become the backbone of society, their understanding of asset value has fundamentally changed from that of their parents. Gold may be just a museum piece to them. Bitcoin, on the other hand, is a store of value for the digital age that they understand and trust. Second, and what I consider to be the most valuable part of this report, it reveals a brilliant idea for getting a national player into Bitcoin. Did you know that despite possessing the world's largest gold reserves, at 8,133 tons, the official value of this gold is still based on the 1973 standard of $42 per ounce. At this antique price, the total value of the U.S. gold reserves is a mere $11 billion. It's like your grandfather left you a courtyard house in Beijing's Second Ring Road, but when registering the property, he insisted on calculating its value based on 1973 prices. If revalued at today's market prices, the actual value of this gold would exceed $834 billion. This combination creates a theoretical windfall of over $820 billion. What could this money be used for? It could be used to directly purchase Bitcoin without increasing the fiscal budget or spending, modernizing the allocation of national assets. This is more than just a public opinion survey. It's more like a national-level Bitcoin purchase feasibility report. It bypasses all political and budgetary obstacles, charting a budget-neutral path for the government and the inevitability of future government embrace of digital assets. This is the true signal behind this poll that deserves our deep consideration. If American public opinion is merely a voice, then Norway, far away in Northern Europe, has already provided its answer through concrete action. This is our second signal. Norway boasts one of the world's largest sovereign wealth funds, Norges Bank Investment Management, NBM. You could think of it as the Norwegian national team, managing trillions of dollars in national wealth and renowned for its prudent and long-term investment style. Yet, this ultra-conservative national player has unwittingly become a formidable force in the Bitcoin world. Of course, they've played it very cleverly. According to K33 research, NBM didn't directly purchase Bitcoin. Instead, they employed a Trojan horse strategy, indirectly gaining Bitcoin exposure by investing in publicly traded companies with significant Bitcoin holdings. Data shows that by August 2025, BIM's Bitcoin holdings through this indirect method had soared from 3,821 at the end of 2024 to 7,161, a 192% increase in just 1 year. In the first half of 2025 alone, BIM's exposure increased by 3,340 Bitcoins. Where does this Bitcoin exposure come from? This is primarily achieved through increased holdings of companies like Strategy, the world's largest publicly traded Bitcoin holder, and Marathon Digital, a Bitcoin mining company. Strategy alone contributes indirect exposure to over 3,000 Bitcoins to NBM. Furthermore, its portfolio also includes shares of companies like Blockchain, Coinbase, and even GameStop and Tesla, all of which hold Bitcoin to varying degrees. The profound significance of this signal is that Bitcoin is evolving from an alternative asset requiring active allocation to a standard investment in mainstream, high-quality stocks. The Norwegian national team may have intended simply to purchase a Trojan horse they favored, such as Strategy, but they inadvertently also added the Bitcoin soldier hidden within the horse to their portfolio. This represents a higher level of institutionalized adoption. It means that even the most conservative fund managers not yet ready to embrace Bitcoin directly cannot avoid its influence if they still want to invest in this era's most cutting-edge technology companies. In this way, Bitcoin is quietly infiltrating the world's most mainstream and largest capital pool. Okay, the public is calling for action and the government is taking action. But why now? Why Bitcoin? This leads to the third and most crucial signal we'll discuss today. Bitcoin's very nature is undergoing a fundamental change. For a long time, Bitcoin's image was that of a thrilling roller coaster, with sudden price fluctuations of tens of %. This extreme volatility attracted speculators, but also scared away the vast majority of ordinary investors and institutions. However, since the US approved the listing of a Bitcoin spot ETF in January 2024, everything has changed. According to data from Bloomberg ETF analyst Eric Balchunas, as of August 2025, Bitcoin's 90-day rolling volatility had fallen below 40, the lowest point since the ETF was launched. At the time of the ETF's launch, this figure was above 60. More importantly, Bitcoin's volatility is now less than twice that of gold, whereas in the past, it was more than 3 times that of gold. What does this data indicate? Bitcoin is slowly transforming from a roller coaster to a 10,000-ton cruise ship. Spot ETFs are like a massive stabilizer for the ship. They bring massive, continuous, passive buying to the market, significantly smoothing out wild price swings. Analysts believe that the era of extreme price volatility, marked by explosive bull runs and painful crashes, may be giving way to more moderate price fluctuations. This shift in character is revolutionary. It will have 2 direct consequences. One is a dramatic increase in its appeal to large investors. For pension funds, insurance companies, and sovereign wealth funds managing tens or even hundreds of billions of dollars, risk control is paramount. Only when Bitcoin's volatility gradually approaches that of gold can it truly enter their asset allocations. Another is that its potential to become a medium of exchange has greatly increased. No merchant would be willing to accept a currency worth 100 yuan today that could be worth only 50 yuan tomorrow. Increased stability is essential for Bitcoin to move from a speculative asset to a measure of value and a medium of exchange. The 3 signals above, like 3 pieces of a puzzle, perfectly assemble to form a roadmap for Bitcoin's mainstream adoption. The maturation of the asset's character, reduced volatility, has attracted passive institutional adoption, Norwegian funds. And these 2 factors, combined, have ultimately ignited public imagination and confidence, US polls. So, facing this transformation of Bitcoin, how should we, as investors, respond? First, we must remain critical. Polls may be biased. Norway's holdings are still indirect and subject to change at any time due to adjustments to its stock allocation, and reduced volatility means that the epic returns of hundreds of times in the past may be gone forever. Lower risk often translates to lower ceilings. However, we should also recognize that these three signals collectively point to a fundamental shift in investment logic. In the past, investing in Bitcoin was like buying a high-risk lottery ticket, betting on an uncertain future. Now, investing in Bitcoin is more like adding an insurance policy to your portfolio against future uncertainty. Its competitors are no longer other exotic altcoins, but gold, prime real estate, and even world-famous paintings. It is becoming a crucial alternative asset for global investors to consider alongside traditional assets like stocks and bonds. Therefore, my advice to investors is: 1. Reevaluate your asset allocation. If you have previously completely rejected Bitcoin due to its high volatility, it may be time to reassess whether a small portion of your portfolio, e.g., 1% to 5%, should be allocated to this maturing asset. 2. Adjust your investment mindset. Shift from pursuing short-term price spikes to long-term value holdings. A cruiser may not give you the thrill of a roller coaster, but it can take you further and more steadily. ETF data, inflows and outflows, and holdings reports from other institutions and countries will become more important indicators than short-term technical analysis. 3. Understanding Bitcoin's new role. It is slowly transforming from an offensive, speculative tool to a defensive store of value. Someday, when the global economy is once again mired in turmoil, its performance will be the ultimate test of the success of this transformation. In short, we are witnessing a profound reshaping of Bitcoin's identity. The Wild West era, once reserved for geeks and adventurers, is slowly coming to an end. A new era, more mature, more institutionalized, and more expansive, is upon us. Understanding this trend may be far more important than accurately predicting tomorrow's price fluctuations. The above content is information analysis only, not investment advice. Thank you for your attention, and see you next time.